Since the Blue Water Vietnam Veterans Act of 2020 removed loan limits on VA loans, technically, there's no cap on the dollar amount a veteran can borrow. Veterans who qualify for it could very well purchase a home for $4 million, for example, and borrow 100% of that without a down payment. Even though the general rule is that there are no longer any VA loan amount caps, the actual amount a veteran can borrow is determined by their unique situation. So there are indeed limitations, but not in the sense of blanket loan caps imposed by VA guidelines. Instead, any caps on the amount you as an individual can borrow for a particular transaction are tied to the specific attributes of that transaction. And in this video, we show you 5 of them. Here are 5 limiting factors that affect how much you can borrow with a VA loan. 1. Residual income and debt ratio. For any VA loan, the residual income benchmark that has to be met would determine the total monthly mortgage payment allowed, which in turn would dictate the maximum loan amount for that veteran on that transaction. If the residual income is insufficient, the mortgage payment amount that feeds into that calculation would need to be lowered, which then lowers the VA loan amount. We also mention debt ratio here because even though VA loans are driven by residual income and not by debt ratio, it's undeniable that the automated underwriting systems that make decisions on VA loans are sensitive to debt ratio percentages. In joint VA loans where a veteran is purchasing a home with a civilian, in other words, a non-veteran co-signer, the veteran has to qualify for his or her portion of the loan without the co-signer's income being considered. This also indirectly affects the maximum amount that can be borrowed. Let's look at another limiting factor that determines the maximum a veteran could borrow. 2. Appraised value. For purchase and cash-out refinance transactions, VA requires a full appraisal. The final notice of value issued by the authorized individual at the lender tells the veteran what the reasonable value is. The VA loan amount cannot exceed that, except for financing the VA funding fee on top of that base loan amount. For example, if the veteran's funding fee rate is 2.15%, then when purchasing a $350,000 home, she can borrow $350,000 plus $7,525 for the funding fee, bringing the total VA loan amount to $357,525. But she couldn't borrow any more. In a home purchase transaction where the contract price with the seller is, say, $412,000, but the VA appraisal came in lower, at, say, $400,000, the veteran could only borrow $400,000 plus the funding fee. On VA cash-out refinances, the funding fee cannot be stacked on top of the base loan amount. So what other factors can limit the amount a veteran could borrow? 3. Remaining entitlement and county loan limits. If the veteran has full entitlement available, as indicated on the certificate of eligibility, then there's no loan limit, regardless of which county they're buying in. However, in many cases, a veteran may only have partial entitlement left for use in the next transaction. Some common reasons for this are: A, there's an active VA loan and some entitlement remains tied up with it, or B, some entitlement was lost because a home involving a prior VA loan was short-sold, foreclosed on, or handed back with deed in lieu of foreclosure, where the VA had to pay out a claim to the lender, and the loss was never repaid to VA. When only partial entitlement is left, then the county loan limits dictate how much that veteran could borrow before a cash down payment is needed. 4. Lender overlays. Although VA has no set loan limits, most lenders will set their own investor-driven maximums based on their appetite for risk. At the time of this recording, it's rare to find a VA lender that will lend more than $4 million on a VA loan. If you are in a position where you need more, you may need to ask for an exception. 5. Number of non-veterans on a joint VA loan. A joint VA loan, as discussed in another video in our series, is a loan where a civilian or non-veteran co-signs with the veteran on the new VA loan or is included on title but excluded from the loan. Only the veteran has VA entitlement, obviously, so the VA will guarantee the veteran's portion of the loan. When you do the math, for one veteran and one non-veteran, the minimum cash down payment needed comes out to be about 14.28% of the purchase price approximately. However, when you add a third or even fourth person on the VA loan, where there's only one veteran, the down payment required increases and the VA loan amount decreases. For example, a VA loan with 3 borrowers where there's one veteran and 2 non-veterans would require approximately 18.2% down payment. There is still no cap on what you can borrow with a VA loan, but the loan will require a down payment to cover 25% of the non-veteran portion of the loan. This factor would set a cap on what you can borrow with a VA loan. In conclusion, the answer to the question, are there VA loan limits, is no. But to be accurate and relevant, the better question to ask is, how much could I borrow with a VA loan? Since this will always have limitations, as you've seen from our discussion.